Hello students, welcome to all of you Shiksha 360. Today we have to discuss regarding the credit delivery. What is that the meaning of the word credit delivery? Let's try to understand that. So credit limits can be sanctioned or can be availed in any of the following methods as required by the borrower. Clear? So basically in which ways? First one that is sole banking, second one that is multiple banking arrangement, third one that is consortium arrangement, fourth one that is syndication, fifth one that is joint lending arrangement. Clear? So on the basis of that, customer can avail the credit limits in any of the methods, by any of the methods, either the loan or we can say that the credit limits. So under the sole banking, that is under the sole banking, the entire credit requirements, clear, under the sole banking, the entire credit requirements of the borrower are met by the one bank only. Clear? So under sole banking, the entire credit requirements of the borrower are to be met by the one bank only. Next one, very, very important, that is consortium advances. What is the meaning of the word consortium advances? For the promotion examinations, for the interviews, these are very important questions. Clear? Many students are requested for the PDF of these videos. So you are requested to go to the link available in the description of the video where the PDF of the documents are to be available. Consortium advances. The necessity of consortium arises when the amount involved it is very large and beyond the permissible resources of a single bank or beyond what a bank would like to risk under the ordinary circumstances on a single borrower beyond the prudential exposure norms. Clear? Beyond the prudential exposure norms. Basically what it tells you say that basically if the amount it is very large or the bank it is not want to take a risk of that large amount on a single borrower. Clear? So basically whether in that case they will go for the consortium advances. What is the meaning of that? So here borrower have multi divisions or multi product companies are to be treated as one single unit unless there is more than one published balance sheet for each division or unit. Clear? If there it is overall one balance sheet, so it will be considered as a single unit. Therefore, more than one bank financing each division of the company with only one published balance sheet without the formation of consortium or multiple banking arrangement would not be in order. Further, that is what they are trying to say, that under the consortium arrangement, more than one lending institution, including the banks, okay, under the consortium arrangement, more than one lending institution, including the consortium banks, may participate in consortium to share the advances up to the total asset requirement of a borrower on the agreed proportions. Okay. So under the consortium arrangement, more than one lending institution, including the banks, may participate in consortium to share the advances. They may participate in consortium to share the advances up to the total assessed requirement. Okay, up to the total assessed requirement of a borrower on the agreed proportions. On the agreed proportions. So why the consortium lending? It is essential in debt planning. Consortium lending offers the key advantages, especially in the risk mitigation, that is risk reduction. Like we can say that here we are taking one example. Picture rupees 2000 crore project. Just example. Dividing this amount means each lender minimum exposure could be just 150 crore. So this significantly lowers the risk of loss from borrower default. It also helps banks comply with the RBI rule, that is, which limits exposure to any borrower to 25% of a bank's total capital. Like if this is the 2000 crore, if we have like 2 lakh crore proposal, clear? So in this way, we have to follow the RBI guidelines also side by side, at every place. Additionally, consortium lending pools expertise, enhancing the quality of loan appraisal and due diligence. This is crucial for the renewable energy projects like those from the IREDA, which have specific debt to equity ratios for funding. Consortium arrangements also assist the banks in meeting priority sector lending targets by collaborating with the NBFCs. Okay. They are also able to complete their priority sector target lending. Okay. In the case of the consortium. Hope you are able to understand what is the meaning of the consortium advances. Next one, that is the multiple banking arrangement. Borrowers can avail any credit facility, both the fund-based and non-fund-based, from any number of banks without a formal consortium arrangement. Without a formal consortium arrangement, under that, banks will form the group under the consortium. Here, the borrower will go to the individual bank. What is say that, like here we have to understand. So long as the total credit limits enjoyed by a borrower from the bank are within the permissible resources of a single bank or within the prudential exposure norms, such facilities can be extended by the individual banks without a formal consortium under MPA. Clear? So such facilities can be extended by the individual banks without a formal consortium under the MBA, that is multiple banking arrangement, to strengthen the sharing information about the status of borrowers enjoying the credit facilities under MBA. Following guidelines shall be adhered to. First one, where the borrowers enjoy the credit facilities, where the borrowers enjoy the credit facilities from more than one bank, obtain the declaration about the credit facilities already enjoyed by them from the other banks from the borrower. Also obtain declaration each time any fresh facilities or enhancements or sorts or limits are to be renewed. Clear? Any fresh facilities or enhancements are to be sought or limits are to be renewed. Okay. Bank shall obtain further, that is, bank shall obtain full details of all credit facilities, including the temporary or ad hoc facilities availed by such borrowers from the banking system, duly certified by their auditors every time the credit facilities are renewed or fresh facilities or enhancements are to be permitted. Okay, every time. Under the consortium finances, several banks finance a single borrower with the common appraisal. Here, under the consortium financing, several banks finance a single borrower with the common appraisal, common documentation, joint supervision, and follow-up exercises. But in the multiple banking, different banks provide finance and other banking facilities to a single borrower without having a common arrangement. Okay. So under the consortium financing, kindly try to understand the difference between this, because this will be asked in the examination in the form of the questions or multiple choice questions. Under the consortium financing, several banks finance a single borrower with the common appraisal, common documentation, joint supervision, and follow-up exercises. But in the multiple banking, different banks finance or provide finance and other banking facilities to a single borrower without having a common arrangement. That is, without having a common arrangement. Next one here, that is the loan syndication. Loan syndication, what is that? A syndicated credit, it is an agreement. A syndicated credit, it is an agreement between two or more lending institutions. What is syndicated credit? A syndicated credit, it is an agreement between two or more lending institutions to provide the borrower credit facility using common loan documentation. Okay, a syndicated credit, it is an agreement between two or more lending institutions to provide the borrower credit facility. Clear? To provide the borrower credit facility using common loans documentation. Here, bank shall obtain a mandate from the project sponsor. What the bank will do? Here, the bank shall obtain a mandate from the project sponsor and act as a lead manager or mandated bank to arrange credit on its behalf. Okay. Here, the bank shall obtain a mandate from the project sponsor and act as a lead manager or the mandated bank, that all the things will be done by this bank to arrange a credit on its behalf. Wherever bank is appointed as a lead manager or mandated bank, the bank shall follow the general guidelines laid down for syndication of loan. Wherever any bank wants to participate in loan syndication, the information memorandum prepared by the lead manager or the mandated bank shall be evaluated and the matter be placed before the appropriate authority for the decision. While loan syndication typically work across the borders and may handle financing in different currencies, consortium typically occur within the boundaries of a given nation. Very, very important. Under the loan syndication, it works also across the borders and may handle financing in the different currencies, but the consortium will be occur within the boundaries of a given nation. The managing bank in a loan syndication, not necessarily the majority lender. or lead bank. Any of the participating banks may act as a lead or assume the responsibilities of the managing bank, depending upon how the credit agreement it is to be drawn up. Under the consortium, all the banks act as a supervisor, whereas under the loan syndication, there is a lead bank or syndicate agent who looks after all the issues. Okay, under the consortium, kindly remember that all the banks act as a supervisor, whereas under the loan syndication, there is a lead bank or syndicate agent who looks after all the issues. Consortium, it is within a country's boundary, whereas under syndication, institutions from different countries pool their sources to provide the required amount. While a loan syndication also involves multiple lenders and a single borrower, the term it is generally reserved for loan involving international transactions, different currencies, and a necessary banking cooperation to guarantee the payments and reduce the exposure. Very, very important. Hope you are able to understand what is the difference between the consortium and syndication. A loan syndication, it is headed by a managing bank that is approached by the borrower to arrange the credit. The managing bank is generally responsible for negotiating conditions and arranging the syndicate. In return, the borrower generally pays the fees to the bank. For that, like for meeting of the 5 or 6 banks that are available for the loan syndication, they have a meeting, and the meeting fees for, you can say that, coordinating that meeting or conducting that meeting, it is to be paid by the borrower. So loan syndication, it is a process where borrower approaches a single bank or financial institution, and that bank sanction a part of the loan and gets the rest of the part sanctioned from the other banks. Sometimes the bank may not provide the loan itself and may get it sanctioned from the other banks. Banks do this for a fees and also to diversify the risk. In case of the consortium, borrower approaches different banks and get them at one platform. Generally, the bank having the largest share of loan act as a leader of consortium. That is the loan syndication. Last one here, that is the joint lending arrangement. What is JLA? With the view to inculcate the required financial discipline in the borrowers and to enable the financing banks to take informed decision on credit matters and act as a risk mitigant, the ground rules governing the joint lending arrangements has been introduced. Okay, so here what happened, that is the ground rules governing the joint lending arrangement has been introduced. What is the meaning of the word joint lending arrangement? The joint lending arrangement scheme will be applicable to all the lending arrangements with the single borrower with aggregate credit limits, both fund-based and non-fund-based, of 150 crore and above, involving more than one public sector bank. Okay, I will repeat here. The joint lending arrangement scheme shall be applicable to all the lending arrangements with a single borrower with aggregate credit limits, both fund-based and non-fund-based, of rupees 150 crore and above, involving more than one public sector bank. Borrowers having multiple banking arrangements below 150 crore may also be encouraged to come under the joint lending arrangement. Banks and consortia shall treat borrowers having multiple division or multiple product companies as one single unit unless there is more than one published balance sheet. Okay, all the things will be dependent on the balance sheet. Basically, either it has one balance sheet or the multiple balance sheet depending upon the work. So this is the overall discussion of the credit delivery. Hope you are able to understand all the points. For any query, for any question, you can mail to us or you can comment in the comment section. For the JAP CAP certificate promotion, you can join or contact on our official mail ID. Thanks to all of you for joining this discussion.